Imagine this. You're diligently saving and investing, thinking you're on the fast track to financial freedom. But what if I told you that hidden in your strategy are silent killers? Mistakes that are draining your wealth right under your nose. These aren't just small slip-ups. They're the kind of blunders that could be costing you thousands, even tens of thousands of dollars. Today, I'm exposing the biggest investing mistakes that almost everyone makes, and by the end of this video, you'll know exactly how to avoid them and keep more of your hard-earned money where it belongs, in your pocket. Trust me, you won't want to miss the last tip. It's a game changer that even seasoned investors overlook. Investing is one of the best ways to build wealth, but it's also a double-edged sword. Done right, it can set you up for life. Done wrong, it can leave you wondering where all your money went. So, let's dive into these costly mistakes and make sure you're on the right path to financial freedom. First up, mistake number 1, chasing hot stocks. We've all seen the headlines, stocks that are up 300% in a week, or the next big thing. It's tempting to jump in, but here's the truth. By the time you hear about a hot stock, it's probably already too late. Buying into a stock at its peak means you're paying top dollar, and when the hype dies down, you could be left holding the bag. Instead, focus on long-term value. Look for companies with strong fundamentals, steady growth, and a solid track record. Investing is about patience, not instant gratification. Mistake number 2, ignoring fees. This is one of those sneaky pitfalls that can slowly drain your portfolio without you even realizing it. Every fund you invest in, every trade you make, there are fees associated with it. Over time, these fees compound and eat into your returns. It's like filling up a bucket with water, but there's a small hole at the bottom. You're losing water, and in this case, it's your money. To avoid this, always compare the fees of different investment options. Low-cost index funds are a great way to minimize fees while still capturing the overall market's performance. Remember, every dollar saved on fees is a dollar more that stays in your pocket. Let's move on to mistake number 3, lack of diversification. Diversification is often called the only free lunch in investing, and for good reason. When you put all your money into one stock, sector, or asset class, you're taking on unnecessary risk. If that single investment tanks, so does your entire portfolio. But when you diversify, you spread that risk out. Think of it like this. If you have 10 different investments and one performs poorly, the others can help balance it out. Diversification protects you from the volatility of any single investment and helps smooth out your returns over time. It's a simple yet powerful way to safeguard your wealth. Mistake number 4, not understanding what you're investing in. This is a big one. Too many people invest in things they don't fully understand, whether it's complex financial products, trendy stocks, or cryptocurrencies. They hear a tip from a friend or read something online and think, why not? But investing in something without understanding how it works is like flying blind. You wouldn't buy a car without knowing how to drive, right? The same principle applies here. Before you put your money into anything, make sure you understand how it works, the risks involved, and how it fits into your overall financial goals. Knowledge is your best defense against making costly mistakes. Mistake number 5, timing the market. This one's a classic. We all wish we could buy low and sell high, but the truth is, timing the market is nearly impossible, even for the pros. Market timing requires you to be right twice, when you buy and when you sell. The odds are not in your favor. Instead of trying to predict the unpredictable, focus on time in the market. History shows that those who stay invested long-term, riding out the ups and downs, typically fare much better than those who try to time their entries and exits. Consistency is key. Invest regularly, stick to your plan, and let the power of compounding work its magic over time. Now let's talk about a critical mistake that often goes unnoticed. Mistake number 6, not reinvesting dividends. Dividends might seem like a nice little bonus, a bit of extra cash to pocket. But here's the thing, reinvesting those dividends can dramatically increase your returns over time. It's called compounding, earning interest on your interest, and it's one of the most powerful tools in investing. When you reinvest your dividends, you're buying more shares, which in turn generate more dividends, and the cycle continues. Over the years, this can significantly boost your portfolio's growth. So instead of taking those dividends as cash, reinvest them and let your money keep growing. All right, now it's time for the bonus tip, one that could be the most important of all: emotional investing. Let's face it, we're all human, and emotions are part of the package. But when it comes to investing, emotions can be your worst enemy. Fear and greed are the two biggest culprits. When the market drops, fear kicks in and tells you to sell everything. When the market is soaring, greed tempts you to buy more and more, even if the prices are inflated. But here's the truth. Successful investing is about logic, not emotion. The market will always have ups and downs. That's normal. The key is to stick to your strategy, trust the process, and avoid making knee-jerk decisions based on short-term market movements. Remember, the tortoise wins the race, not the hare. So, there you have it. 6 common investing mistakes that could be costing you big money, plus a bonus tip to help you keep your emotions in check. Investing is a journey, and while mistakes are part of the learning process, knowing how to avoid these pitfalls can save you a lot of money and stress along the way. If you found this video helpful, make sure to check out the other videos on my channel, where I cover more strategies and tips to help you become a smarter, more successful investor. Hit that subscribe button and ring the bell so you never miss out on new content. Thanks for watching, and until next time, keep saving, keep investing, and remember, it's never too late to become your own financial hero.